Hi everyone, welcome back to my channel and thanks for watching this video. Um, the topic is payment methods and I was looking into payment methods. There are many type of payment methods and for example payment using credit card, net banking, etc. And uh, the type of payment method that is suitable in a particular situation depends on the payment scenario and few other factors. Um, at a high level, we can assume that majorly there are three players: individual, customer or person, business or merchant who sell items, and government agencies. There are multiple payment methods available, and different payment method may suit in different scenario. Um, One of the very basic payment method is USSD, which is a GSM technology similar to SMS. In general, customers with feature phone dial asterisk or hash sign followed by two or three digit number. For example, in India, it is asterisk 99 hash, and this is to start the USSD communication. And when user dials, the telecom provider returns a menu, and user chooses the option for it. For example, buy airtime. Important thing is that this is a payment method which works without internet connection and without a smartphone. And it is a popular payment method in regions where internet coverage is low and people mostly carry feature phones. People can do fund transfer using the USSD menu. They enter the mobile number to which they want to transfer. Now, one of the first big application of this payment method was M-Pesa, which was a project in collaboration among Safaricom, a local telco provider, Vodafone, a bank, and a microfinance organization, and obviously government. So idea was to provide a payment method to unbanked people. So not only these people have no internet coverage, they don't have a smartphone, and they don't have bank accounts, but the idea of M-Pesa was how they can still transfer the money. So how it works was that, for example, a person A has a feature phone and has opted for M-Pesa. So they use USSD menu on the feature phone. So USSD is like actually is like SMS. It is available on every phone. So person A can go to a agent who is a local dealer shop who sells SIM cards, and person A deposits cash at the dealer, and dealer updates the e-money balance of the person A. Person A has a feature phone, and person A uses the USSD menu in the phone to view the balance and also to send money to person B, who is uh, also a feature phone user and has a mobile number registered with the same telco provider. Both person A and person B are on the telecom network. There is no internet, and USSD menu in the phone is available to both. USSD menu is driven by the backend server-side application, which is on the telco provider side, and money transfer update request is received by the server-side application, which updates the e-money balance for person B. It's all e-money, but it also corresponds to real money, but that part is taken care by the telco. So telco can open one big bank account and create multiple virtual e-money accounts. So all money goes to one bank account only, which is of telco. Mobile wallet is um, further extension of this. So once once the customer is onboarded to the network, then telco can finance and provide a smartphone to the user, or actually user themselves can upgrade from feature phone to the smartphone, whereas the user still doesn't have a bank account. So telco companies upgraded this payment method and introduced mobile wallet. So it's still using USSD as in terms of commands and the way of interaction. But now there is a mobile app with a UI, and mobile wallet is very similar to cash, which is there in the physical wallet. So we can now see this mobile wallet on the mobile phone. We can give it to someone. We can purchase items and so on. Um, they provide payment to both feature phone and smartphone users. And Orange Wallet is a popular mobile wallet service in Botswana. If a pay and payer both are using mobile wallet, and then it's just a P2P transfer from one wallet to other. Smega is another mobile wallet available in Botswana, and you can actually send money using this Smega mobile wallet. Still, there is no bank account with the user, and now these mobile wallet companies have started also providing prepaid cards. So this is another payment method where in the card is just like a debit card. It has some balance on it, and it is an add-on card on the top of a mobile wallet, and it can be used for purchase, and it can also be used to withdraw cash from the ATM, and also can be used to swipe on point of sale machine or shop online. Um, Payment apps are like another payment method, and personally I very frequently use Google Pay, which is a payment app. It integrates with the bank account. That means it sits between the user and the user's bank account, and the value of the payment app is the convenience. So, though bank provides mobile banking applications, but they are not as convenient as payment apps, because payment is not the core function of bank, but instead core banking is the core function. So, like for example, when I log in into a mobile banking application, I see accounts and balance as on the home screen, whereas the payment app, the core functionality is payment, and they provide other value added services and rewards around payments to attract customers, and their core business is payments, so it's just dedicated for payments. So if I very frequently use payment app, then I will uh, I mean, actually, if I am making very frequently payments of a small transactions, then I will go with payment app. And some of the payments have now become super apps, in which they offer many other financial and non-financial services. These two examples of are Paytm and PhonePe based in India. In similar, Alipay and WeChat are like super apps now. So it's like one app for everything. But they started with payments and now they have grown too much. One of the reason also is that these payments have been apps have been very successful because the banks traditionally focus on large amount transactions and not so frequent. They have an history of working in batches, whereas payment app focus is a small amount transaction but very frequent transactions. As mobile penetration increased and the push for QR code um, came from market players as a way to exchange information required to initiate or to receive payments. So QR codes are used to convey the account details of the payees, or for payers to convey their payment account details to the payee. So QR code and bar at some places the barcodes are used, at some places QR codes are used. They contain all the information required to make a payment. So they are type of payment method, but they can't work in a standalone. Yes, but some anyways actually mm, like someone you need still need a machine to scan the QR code, but the QR code have been very successful in China in early 2000s, and it has been very successful in India as well. And countries around the world typically been introducing QR code as an overlay service to their existing mobile payment options for cards and fast payments. So QR code is becoming increasingly common, both among merchants and customers, and it provides flexibility to support the needs of both, because small merchants like micro merchants, small merchants and acquirers, they are attracted towards QR code because of its low cost of acquisition and maintenance uh, when compared to point of sale devices or their equivalents. Smaller merchants typically used to observe price as a barrier for digital payments, and the introduction of QR code payments had lifted this barrier, leading to smaller merchants transacting digitally. Many of these smaller merchants, they start with QR code and then they move to more high-end all-in-one point of sale machine. Um, but ongoing maintenance of a merchant presented QR code is limited to reprinting the sticker in the event of wear and tear. Thus, the paper-based QR code sticker is cost-effective. On customer side, scanning a QR code with a handheld device is easier than entering the bank account details or using an alias such as a mobile number. Additionally, customers without bank account and cards can also leverage the QR code as a means of making transactions through other payment instruments such as e-wallets. QR codes have also seen increased uptake during the COVID-19 pandemic. QR code can be static or dynamic. It can be presented by customer or it can be presented by merchant. Merchant can present a static QR code, which is a QR code printed and pasted on a wall or on a sound box. Or merchant can dynamically generate QR to include transaction specific information. As a customer, when I scan a static QR, I enter the amount, whereas when I scan a dynamic QR, I see amount is pre-filled by the merchant. Customers all can also present the QR code. So in this case, QR codes are generated by the customers on their smartphone, and merchant use some kind of a scanner to scan them. Um, Now, cards are another payment method which have mostly come from the West and have been very popular method for decades. Um, Cards have got types or classes, and they have eligibility criteria, and based on the eligibility, card is issued. A credit card company serves multiple personas by providing multiple different type of credit cards which have different kind of features and facilities and rewards. It is like a buy now pay later product, and it comes with a cost, but rewards are high compared to any other payment method. It works internationally. For example, I stayed in UK for 2 years and I used the American Express credit card issued in India for payments. Um, the cards have evolved over time from a plain plastic cards to magnetic strip cards to now cards with chip. So magnetic strip is like it's a strip with some static data programmed at the time card is issued. The data contains the PAN, expiry date, and usage controls. And cards with magnetic strips are swiped in card reader, and card readers read the information available in the magnetic strips. Then came smart cards, which have a integrated circuit, which is a very small computer with processor for executing instructions, memory for holding transient information, a storage for preserving information, and an input-output to talk to outside world. It can have secret keys as PIN, cryptographic processing for proof of use, and tamper resistant for security. So the card has intelligence. The card with chips, they have intelligence, and it can also make a final decision on the behalf of issuer to approve or decline a transaction. A card reader, first thing it does is gets to know the application. Um, for example, Visa application on Visa card or MasterCard application, and processes the transaction in accordance to the rules set by the Visa application if the card is Visa. Now, Visa, MasterCard, American Express, these are also called schemes. Card can go to issuer for authorization. Issuer can send encrypted data, which can be decrypted by the card. So it's a very secure method as long as it doesn't go in wrong hands. And now Cards further evolved, and cards with chip have now antennas for tapping to do transaction insert instead of insert, which saves time. So there is some physics behind how it works. The card reader has electronic circuit which generates electromagnetic field, and when card comes closer to it, like within 4 inches distance, cards get energized and data is exchanged in similar to inserting the card, and the customer can just tap and pay. And they have an option to enable or disable the tap. Now, since actually initially Apple and Google in 2000s they started experimenting with NFC, and idea was mobile can store the payment credentials in the same way as a contactless card, and then mobile can be used for payment to card readers in same way as a contactless cards. So all the secrets are stored in a secure element, which can be SIM card or purpose-built chip inside the mobile phone. Since issuer is not in control of phone, the secure element is important. And a NFC controller, which is a chip defined in a specification by NFC forum, is on the phone. It can talk to the operating system on the phone. It can talk to App Store, secure element, and it can also talk to other applications. For example, hotel check-in, data exchange, etc. And it is the interface between the secure element and the operating system. So NFC controller can emulate the card. But not only that, NFC controller can also emulate a card reader. So NFC controller on one phone can emulate become a card reader, and NFC controller on another phone can become a credit card. And in this way, they can exchange funds, or money can be transferred from one phone to another just by touching the phones. Um, and just by touch, it can read the data from the phone. Digital wallets are complete replacement of the physical wallets. So previously I mentioned that mobile wallets are replacement of the cash in the physical wallet, whereas digital wallets are complete replacement, because not only they store the card information, they also store ID documents, event tickets, etc. And it can be used to make payments if a point of sale machine is available at the merchant. And uh, and there can be some mode of communication such as NFC. So digital wallet can actually be just in a similar way like a card can be tapped, digital wallet can be tapped and payment can be made. Digital wallets are are popular among Gen Z population, and Apple, Google, and Samsung, and so on, some niche players are providing digital wallet service. Once customer has stored credentials and used a digital wallet to verify their identities or present credentials to access events or programs um, and other uses, and it has been observed that they are by large satisfied with the convenience and ease of use of digital wallet, and they will continue to use it. Um, Same time, actually, it's not very popular among older generation, and many people will be still continuing with physical wallets. But it's we can assume that majority of young consumers will possibly not carry physical wallet all the time and instead rely on digital wallet at many occasions. And lastly, actually, this is another important payment method, which is interbank transfer. So both in India, like both IMPS and UPI are fast interbank transfer methods, and they support individual, business, and government transactions. Additionally, UPI also supports non-financial transactions such as balance inquiries. um, IMPS and UPI support numerous channel and use cases they support, and it has been observed that they improve customer stickiness and convenience, because customer doesn't want to shift to any other alternate platform once they start using UPI. Um, IMPS faced some challenges initially because of complexity, especially with the mobile money identifier MMID, which had to be used to perform transactions. And it came before UPI. And by 2015, there has been surge in the mobile banking solutions, and penetration of smartphones have also picked up by then. With this background, RBI and NPCI in India envisioned to launch a solution aimed at customer convenience by providing a standard interface for communication across different mobile banking applications of banks, thus facilitating interoperability. This was in line with the RBI vision at that point, which included aspects of acceptability, interoperability, and customer convenience. Um, like India, in UK, BACS is the oldest UK payment system utilized for credit transfer via BACS direct credits, as called as bank transfer or direct deposit, and direct debit payments an instruction made to a bank by a customer that permits an organization to make authorized collections. BACS transfers typically take 3 days to complete, and deposit and collections are only made Monday to Friday. CHAPS, Clearinghouse Automated Payment System, is a real-time gross settlement system, RTGS, that was introduced to speed up payment processing of high-value transactions in UK. Providing instructions are received before the specified cutoff time on a working day. Funds will be processed on the same day. Urgent real-time settlement of funds is also available through CHAPS. And CHAPS is not cheap. Additionally, once a payment is instructed, it is irrevocable between direct participants, bank to bank. And same applies to RTGS in India, meaning that it is not possible to revoke the payment. Faster Payments (FPS) was launched in 2000s to enable instant transfer of funds made in sterling between UK financial institutions participating. Um, it was made to send and receive low value real time payments with no fees and can be completed online via banking apps or in branch or by the phone. And in similar, all countries have some old payment methods and some new real time faster payment system. So any country where actually you might be implementing the solution, you need to check what is the faster payment system available in that country. The focus of governments and central bank across all countries have evolved, so are the payment methods. So in early days, security and effectiveness was top priority. Then legal frameworks for payments and settlements were established, but the payment and transaction was still slow. Then the system should be available 24 by 7 was a priority. Along with being secure, there should be customer authorization and it should work 24 by 7. Then the payment method should also be affordable, available, and acceptable by the mass. For example, credit cards are secure, effective, accessible. They ask for authorization before payment, but they are not affordable and available for everyone. That's why they are not acceptable by all type of merchants. A micro merchant might not afford a card reader or point of sale machine and will not pay any transaction fee. Lastly, um, now the priority is also coverage and convenience. So the payment method should work everywhere and it should be very convenient. And that's why a combination of QR and UPI that works on the top of the smartphone and internet coverage has been huge success in India and China, initially in urban cities, but now also in rural areas. So I have covered not all, but important payment methods. But there is another important thing that is the capabilities of the customer. So the payment method that customer may prefer depend on the context. That includes customer's nationality, customer's income, and customer capabilities. So, for example, if customer already has a smartphone and has a bank account, they might go with a payment app, or a customer has a mobile banking app already, and which works well, then they might not prefer to install any kind of payment app. Whereas some customers might have a credit card also, and they might have payment app also, and they may decide, okay, where to use credit card and where to use payment app. Cryptocurrency is also a customer capabilities, and if they have, they might want to use it. In similar, the merchant capabilities are also important, and this depends on the merchant persona. If it's a merchant is a micro merchant, then they might have different capabilities. Also, if the merchant's location is important, because if they are based in urban city, they might be fine with digital payments, whereas if they are based in rural, they might prefer cash. And but if they are SME, then they might already have a smartphone and bank account, but still or may not have bank account. Or if customer has multiple stores, then they might be looking for some kind of a payment method that can have one backend wherein they can consolidate all the payments. Or if they have an online store, then they might be looking for a payment gateway. Or if they get all type of customers, some pay by cash, some pay by cards, some pay by payment app with QR code, then they might go with a all-in-one point of sale machine. Now, based on the scenario, based on the location, based on the region, and based on the capabilities of the parties involved, the payment method or methods can be chosen. Thank you.